Hey there, Money Mavens! Welcome to Ace Wealth Raiser, where we will be diving into all things related to the world of finance, economics, and business. Whether you are a seasoned investor or just starting to dip your toes into the financial waters, we've got something for you. From breaking down the latest market trends to demystifying complex financial concepts, we are here to help you level up your financial game. For today's video, we are going to talk about how to research stocks, evaluate their growth, and manage your portfolio of individual stocks. Investing in stocks can be a lucrative way to grow your wealth over time. However, to be successful in the market, you need to have a firm grasp of the companies you are dealing with and the risk they carry so you can hedge yourself against their unpredictability. In this video, we'll be presenting the top 5 ways on how to do so. So, grab a cup of coffee and let's dive in. Number 1. Start with a basic understanding of the stock market. To be successful in investing, it is important to have a basic understanding of how the stock market works. This includes knowing the difference between stocks and bonds, understanding stock exchanges, and understanding market capitalization. There are numerous sources, from books to videos to people, that can help you with fundamental understanding of stocks. When you finally have a basic understanding of stocks, you can better navigate the stock market and make more informed investment decisions. Number 2. Define your investment goals and risk tolerance. Defining your investment goals and risk tolerance is an important step in investing in individual stocks. Your investment goals will determine the types of stocks you invest in, while your risk tolerance will determine how much risk you are willing to take on. If you are investing for retirement, your investment goals may be to save enough money to provide for your needs in your sunset years. Your risk tolerance may be moderate, as you have a long-term investment horizon and can afford to take on some risk. On the other hand, if you are investing for a short-term goal, such as saving for a down payment on a house, your risk tolerance may be lower as you can afford to lose money in the short term. By defining your investment goals and risk tolerance, you can create an investment strategy that is tailored to your individual needs. Number 3. Research individual companies and industries. When researching individual companies and industries, it is important to analyze financial statements, look at historical trends, and read news articles and analyst reports. This will help you gain a better understanding of the company's performance and potential for growth. Suppose you're interested in investing in the technology industry, and you've narrowed your focus to 2 companies, Company A and Company B. By researching each company's financial statements, industry trends, and competitive advantages, you can make an informed decision about which company to invest in. For example, you may find that Company A has a larger market share and a more diverse product line, while Company B has a stronger growth rate and a more innovative management team. By weighing the pros and cons of each company, you can make an informed investment decision. Number 4. Evaluate the potential for growth. When evaluating the potential for growth, it is important to look beyond a company's past performance and consider its trajectory for the future. This includes looking at industry trends, competitive advantages, and management expertise. For example, you can look at industry reports to see if the industry is expected to grow in the future. You can also look at a company's competitive advantage, such as its unique products or services, to see if it has a competitive edge. Additionally, you can look at the management team to see if they have a track record of success. Let's say you are studying a certain furniture company. You might look at the size of the market for the product, the company's track record of developing successful furniture items, the strength of its patents, and the scope of its customer base. By weighing these factors, you can determine whether the company has strong long-term prospects. Number 5. Manage your portfolio. Managing your portfolio is an ongoing process that involves monitoring your investment on a regular basis, rebalancing your portfolio periodically, and adjusting your investments as needed based on changes in the market. By managing your portfolio effectively, you can minimize risk and maximize returns over the long term. Suppose you have a portfolio of stocks and bonds that you've been managing for several years. Over time, your asset allocation has become unbalanced, with a larger percentage of your portfolio in stocks than you originally intended. By rebalancing your portfolio, you can bring your asset allocation back in line with your investment goals and risk tolerance. Additionally, suppose one of the companies in your portfolio has experienced a significant drop in price due to a negative earnings report. By evaluating the company's long-term prospects and considering your investment goals and risk tolerance, you can make an informed decision about whether to sell the stock or to hold onto it. In summary, having a basic understanding of stocks, choosing your investment goals and risk tolerance, Researching companies, identifying their growth potential, and managing your portfolio are 5 certain ways on how you can be more savvy, more intelligent in evaluating, investing, and managing stocks. This is Ace Wealth Raiser, and we'll see you next time.